Hey everyone, Nick here. Looking at CRM, maybe there's an opportunity to trade it tomorrow. This also helps a few people that might already be long the stock. They reported earnings after hours, and spoiler alert, they're down 6% to that blue line right there. So they closed here after a rough day, down 3% today, almost 4 actually, and then on top of it 6%. So therein lies a full-blown correction from just a few ticks ago. This by no means makes a very big bargain, but it's definitely in the hands of the bulls so far, falling into levels that are tradable. Let me give you my opinion on it, but first, a quick glimpse into the S&P today. Some pretty weird closing, the way it closed. We had a huge imbalance at the end. So end of the month, there was an expiration on the options calendar, even though it's not a quarterly expiration. So I was a little, it was a little out of the ordinary volume, etc. So let's see what tomorrow brings. First day of the month. So the S&P fell. It had some good moments. They closed on somewhat of a good note, but overall, definitely the bears took the win with about a 2% drop, little under. Across the board, the Nasdaq held up the best, minus 1.5. So if I look at the Nasdaq, look at the Qs, you can hardly see it. If I go back to the S&P, you can see the big red tick, but you can also see that it's falling into the breakout line from before. So this is part of normal price action, albeit painful for somebody holding a lot of longs, especially calls. Okay, so CRM in specific, fundamentally, what did they do? You'd think that they delivered a stinker of a report. They did not. The report was growth. The only thing they beat on both top line and bottom line, the estimates. Don't give two craps about that myself, but that's what the machines read. But then they missed on earnings. 27 decrease on earnings. Also wrong read, because who cares about the earnings? And I'll tell you why. This thing grows a lot. And when a company is growth company and focused on growing their top line at record speed, this one does. It has a lot of records, all-time records, like how fast did it get to $1 billion, to 10 billion, to 20 billion, whatever. It has like a whole bunch of these records. So they know how to grow. So what if they overspend? So the bottom line was 27% lower than last year, but the growth was about 27% on the top line. So whatever they did to grow cost them a little more than they thought. So they're selling it on that. I couldn't find anything else. The guidance was higher, so I'm not sure where the disappointment lied. But anyway, let's look at how fast this thing grows to look at the fundamental first. This is the P&L. If I look back, total revenue was, let's not go all the way back, 2017, $10.5 billion. It's more than double right now from 2017. So clearly, they know how to grow. Look at the rate of growth. It's just incredible. The bottom line, the net income now is $2.5 billion almost, a lot lower than last year. So they did something. Something cost them. I don't know what. Did they have the Slack deal didn't go through, right? So anyway, they do have. They're not afraid of taking chances. They're like Amazon mentality. I'll spend whatever I need to spend to get stuff done. Price to sales is high. PE, I don't care, because this is not a PE story. Look at it. It's not a PE story. It's this kind of story. How fast is the company growing to keep up with the increased level of its stock? So if we look at the overview, growth in the revenue, profit margins are okay. Debt to asset levels are dropping. And this is an important line. The operating cash from operation is almost $5 billion. So they're in control of their own destiny. So in my opinion, the dips are buying opportunities. Now, the caveat is there is a dip in the market too. So even if this is like a perfect place to go long CRM, I have to leave a little bit of doubt because of what's happening in the stock market. Also, look where it fell. This is a base. This is an absolutely buyable dip. However, there's still an open gap down here. I'm not too concerned about it because of this. So this rally was too fast. This fall was too fast. This rally was too fast. So the whole area is mucky, which means that there's going to be fighting over it. So if it's not here, it's here. I do have two lines One of them will probably beep at me in the morning, maybe not. Look, I have a line to look at it to see if I want to catch the falling knife, and I have another one here and another one here. If it ever comes down to here, I will engage very long. If it ever comes down to here, I will double my position. This I will always review at the time it happens. It's not an automatic saying, hey, Nick said buy it there. Nick will revisit the environment before he buys it there, because the first thing I started is the SPY. What if the market's correct 20%? None of these are going to hold. Okay, so what don't we want happen? We don't want it to bounce and then taper and then lose do a U-turn basically. So now let's say it opens here. This is where it is after hours. Let's say it bounces tomorrow. There's going to be a lot of resistance up here. And if it does this and it comes back and loses that, it's coming down to this area. Meanwhile, there are a lot of support levels. This being one, it's a zone. And this definitely being one. That orange line I'll explain in a second. So somebody asked me if there was support at 290. Yes, because of this little jaunt. But after hours, 1 second. Ooh, got the sneezes. Hopefully it's not COVID. So this cluster is support, but they had already lost it today, and after hours they're below it. So when they come back to it tomorrow, they're going to probably fight it out there. Caveat, I just checked, and the overnight, the after hour low, on the flash low was 264 and change. So they were inside the gap. So tomorrow, my opinion, that if it opens at 267 and it bounces, I wouldn't chase it. I would use the bounce to fix whatever I need to fix, because there's a chance that during the market hours they try to bring it down to 265 or lower. There's a chance. I can't guarantee you that, but be open to it. So the levels I just shared, the concept fundamentals I like. So it's a matter of finding the appropriate entry levels. So who in my opinion shouldn't catch this falling knife? Somebody who's already long CRM. We didn't learn anything new. We knew they're killing it. They delivered killing it results, and Wall Street hated it. Whoever is looking to get long can nibble, but shouldn't go all in because of this overhead of the whole market. What if this is the top? We don't know. So I want to leave room for error. How do I do that? If I usually buy 100 shares, I should only buy like 40. If I sell 10 puts or 5 puts or 2 puts, I should sell one, half. If I buy calls, I shouldn't. The VIX is too high. Everything is expensive, even the calls when the stock is down. So a call spread will do the job, and I should do it way out in time, just above current price, with a pretty high delta in the 30s, maybe 35. Because then I have a realistic chance of success versus buying a cheap call or call spread that has low odds. It's doable, but know that you're buying a lottery ticket versus a lottery ticket with just 3 digits, where you have a good chance of hitting something, versus a lottery ticket that has 15 digits. The odds are way against you. So selling a put spread is the most moderate way of doing it. Selling a put is an appropriate way of doing it for somebody that can buy shares. If I do a trade tomorrow, I will share the details with the video, but this is a prep. Also helping somebody in the chat room that sounded like they're long.